Welcome back to India Business Insights. Today, we are going to look at a company which started life prior to the independence as a locomotive manufacturer. Tata Motors, along with Tata Steel and very few others, has been continuously a part of Sensex throughout the history of Sensex. It started its life as Tata Engineering and Locomotive Company in 1942 and started making commercial vehicles in 1954. It is part of the largest Indian business house, the Tata Group. Today, the operations of Tata Motors spans across India, the UK, South Korea and South Africa with a network of 86 subsidiaries, 10 associate companies, 4 joint ventures and 2 joint operations as on March 31, 2023. Tata Motors Group is present in over 125 countries with a worldwide network comprising over 9,000 touchpoints. Tata Motors Group is operating as 3 independent business units of commercial vehicles, passenger vehicles, and Jaguar Land Rover, offering differentiated value propositions to their different customer segments whilst leveraging back-end and corporate synergies where possible. Before we learn more about Tata Motors Limited, please like and share this video. Please also subscribe to our channel and do not forget to press the notification bell. Let's dive into the history of Tata Motors. Tata Motors was founded in 1945 as a locomotive manufacturer. Tata Group entered the commercial vehicle sector in 1954 after forming a joint venture with the Daimler-Benz of Germany. After years of dominating the commercial vehicle market in India, Tata Motors entered the passenger vehicle market in 1991 by launching the Tata Sierra, a sport utility vehicle based on the Tata Mobile platform, becoming the first Indian manufacturer to achieve the capability of developing a competitive indigenous automobile. In 1998, Tata launched the first fully indigenous Indian passenger car, the Indica, and in 2008 launched the Tata Nano. Tata Motors acquired the South Korean truck manufacturer Daewoo Commercial Vehicles Company in 2004. Tata Motors has been the parent company of Jaguar Land Rover since the acquisition of Jaguar cars and Land Rover from Ford in 2008. Apart from these 3 business divisions, it also has a very significant finance division focusing on the financing of motor vehicles. Business overview. Passenger and utility vehicles in India. Industry sales of passenger vehicles increased by 27% to 37,57,703 units in fiscal year 2022 and 2023 from 29,60,047 units in the fiscal year of 2021 and 2022. Industry-wide sales of passenger cars in India increased by 19.1% in the fiscal year of 2022 to 2023 as compared to the 4.9% decline in the fiscal year of 2021 and 2022. While utility vehicle sales increased by 34.7% in fiscal year 2022-2023, the figures for 2022 and 2023 represent the overall industry sales are on the rise at an increasing rate since FY 2020 and 2021. The passenger vehicle sales in India increased by 45.4% from 3,70,354 units in FY 2021 and 2022 to 5,38,518 units this fiscal year, reflecting a strong response for the new Ford range. Tata Motors sold 1,81,407 units in the passenger car category of India in FY 2020 and 2023 compared to the 1,44,226 units in FY 2021 and 2022. Representing a strong demand for Tiago, Altroz and Jaguar. The company's market share for passenger cars in India rose to 10.4% in FY 2022 and 2023 as compared to 9.8% in FY 2021 and 2022. The following table sets forth the breakup of the sales in various categories. Exhibit existing PV range. These are some of the popular models of Tata Motors. We will also be doing a separate video to cover the various models of the company. Commercial vehicles in India. Industry sales of commercial vehicles rose by 34% to a total of 9,62,347 units in FY 2022 and 2023, compared to the sales of 7,18,155 units in FY 2021 and 2022. The following table sets forth the breakup of the wholesale sales in various categories. MHCVs in India. Industry saw a significant increase of 52.2% in the sale of medium and heavy commercial vehicles in FY 2022 and 2023 compared to FY 2021 and 2022. It sold 122,440 units in FY 2022 and 2023, compared to 88,191 units in FY 2021 and 2022 in this segment, a growth of 38.8%. The quarter-on-quarter improvement was observed due to increase in infrastructure projects, housing construction, and the mining segments in India. Here are some of the models of Tata. We have Signa, Prima, and Winger. ILCVs in India. The sales in the ILCVs in India increased to 54,636 units in FY 2022 and 23, compared to the 53,847 units in FY 2021 and 2022, representing an increase of 1.5%. SCVs and pickups in India. Sales in SCVs and pickup segment in India increased by 9.6% from 1,65,822 units in FY 2021 and 2022 to 1,81,715 units in FY 2022 and 2023. Among all segments in commercial vehicles, the SCV and pickup category has experienced increased demand from e-commerce players, primarily due to the necessity for last-mile distributions to retail consumers by such companies. CV passenger vehicles in India. Sales in CV passenger vehicle segment in India increased by 130.2% in FY 2022-23 compared to FY 2021-2022, from 14,822 units in FY 2021-2022 to 34,120 units in FY 2022 and 23, largely due to an increased demand for public transport due to the recommencement of face-to-face learning in school and colleges and return to office work. The electronic vehicles portfolio. At first, we have Tiago electronic vehicle launched in FY 2022-23. Tiago EV has accelerated the EV adoption by making it accessible to masses. Received strong response with around 10,000 bookings on the first day. Second, we have Harrier EV. Harrier EV, a bold, powerful, intelligent, electric, all-vehicle drive SUV born of legendary pedigree, offers an extraordinary exterior design and future-ready connectivity. This 5-seater monocoque SUV is engineered on the Omega architecture, derived from the legendary Land Rover D8 architecture and developed in collaboration with Jaguar Land Rover. And third, we have Avinya. Avinya concept, an expression of a pure electric vehicle built on the Gen 3 architecture, introduces a new typology of mobility that liberates enormous roominess and comfort. With this, TPEM is all set to unleash a new breed of EVs that will redefine an automobile space. EV penetration on the rise. Performance overview. Company continued to lead the charge in EVs and crossed 50,000 units sales from FY 2022-23, reflecting a 2.6 times growth over FY 2021 and 2022. EV sales increased from an average of 3,500 units per month in the first quarter to an average of 5,000 plus vehicles in the fourth quarter, reflecting the extent of demand that exists. Vahan registrations for the EVs touched 7,000 units in March, and it exited the quarter 4 with a double-digit EV penetration of 12%. Despite an increase in competition in later part of the year, it has maintained strong lead with Vahan market share of 84%. Key brand building initiatives. EV. The Nexon EV Max scaled the world's higher motorable road at Umling La Pass, located in Ladakh, 19,024 feet above sea level. Season 2 of National Geographic's documentary on Nexon EV that brings out the story of Nexon EV and what goes behind creating an entire EV universe. Tata Motors partnered with National Geographic with an objective to spread awareness and encourage viewers to contribute in own ways to the fast-spreading EV revolution in India. In FY 2022-23, Tata Motors introduced Nexon EV Max with a certified range of 453 kilometers and Tiago EV with 2 range options, that is 250 kilometers and 315 kilometers. Jaguar Land Rover. In FY 2022-23, company sold around 3,72,217 units of vehicles during the year. FY 2022 and 23 was turning the corner as sales and profitability increased significantly on the back of easing of the global chip crisis. Revenue stood at £22.8 billion, up to 25% from the prior year. Through a marginal full year, pre-tax loss before exceptional items of £64 million persisted. The recovery was considerable vis-a-vis last year. Profitability improved on account of higher wholesales, better pricing, and a stronger product mix as the new Range Rover Sport, and Defender accounted for 76% of the 2 lakh unit strong order book. This was partly offset by higher material costs, the planned increase in SG&A, and higher manufacturing and supply chain costs. Free cash flow was £0.5 billion as volumes improved progressively and working capital was recovered. The refocused transformation exceeded the full-year target with £1.1 billion of savings this financial year. Jaguar Land Rover performance. JLR made good progress in its reimagined journey to transform into a digitally savvy, modern luxury vehicle, business with sustainability at its heart. It faced a severe shortage of semiconductors, especially in the first half, and as the situation eased in the second half, saw a consistent increase in production and sales volume, particularly of the new Range Rover Sport, and the Defender vehicles. Due to this, the JLR delivered a resilient performance during FY 2022 and 23 with wholesales of 3,21,362 units, that is up to 9%, recording revenues of £22.8 billion, up by 24.5% from FY 2021 and 2022. EBIT margin of 2.4% and PBT of £97 million were remarkably better than the £455 million loss before tax recorded in the previous year. The business also delivered a free cash flow of £521 million. It ended this year in a stronger position with a portfolio of attractive products, a healthy bank of customers' orders touching nearly 2 lakh units, low break-evens with a clear strategy to reimagine its renowned British brands for global clients. The transformation of Jaguar into an all-electric luxury brand is on track with the first new vehicle to be revealed in 2024 and customer deliveries starting in 2025. It will also start taking pre-orders for the maiden pure electric Range Rover later this year. Sales and distribution, Tata Commercial Vehicles and Tata Passenger Vehicles. Sales and distribution of Tata Commercial Vehicles and Tata Passenger Vehicles. Sales and distribution network in India as at March 2023 comprised approximately over 6,800 touchpoints for sales and service for the passenger vehicles and commercial vehicles businesses. It uses a network of service centers on highways and a toll-free customer assistance center to provide 24-hour roadside assistance, including replacement of parts to vehicle owners. It has a toll-free roadside assistance hotline for 24/7 assistance, along with network of service centers along highways that it offers to the vehicle owners. A customer relations management system is maintained at all the dealerships across India to better support users as well as distributors that work with across the globe. Commercial vehicles and passenger vehicles have an established market in several countries in Africa, the Middle East, Southeast Asia, South Asia, Australia, Latin America, and the Commonwealth of Independent States countries. It exports the vehicles and maintains a network of distributors in all such countries. These distributors have created a network of dealers and branch offices and facilities for sales and after-sales servicing of the products in their respective markets. It has also stationed overseas resident sales and service representatives in various countries to oversee operations in the respective territories. Challenges faced by Tata Commercial Vehicles and Tata Passenger Vehicles. Tata Commercial Vehicles. Elevated levels of inflation continue to be a challenge, with commodity prices increasing and impacting margins. Other macroeconomic factors such as fuel price increases and rate hikes are also a key concern, as these play an important role in determining freight rates and therefore transporter profitability. While freight rates have been improving going forward too, it would need to keep pace with the fuel price increases and impending rate hikes. Further, although the semiconductor availability is gradually improving, it continues to be below requirement. The company continues to de-bottleneck by reducing semiconductor intensity, evaluating alternate options, localizing, and strategically building up inventory. Tata Passenger Vehicles. Business environment continues to be challenging, with inflation and commodity price increases impacting profitability and consumer spending power. Semiconductor and other supply constraints are restricting its ability to tap the full demand potential. It aims to mitigate this risk by innovating and fast-tracking its cost reduction efforts to improve profitability. Tata and other brand vehicles, vehicle financing. Through the wholly owned subsidiary TMF Holdings Limited and its step-down subsidiaries Tata Motors Finance Limited, which is TMFL, and Tata Motors Finance Solution Limited, which is TMFSL, it provides financing services to purchasers of the vehicles through independent dealers who act as the agents for financing transactions and through the branch network. TMF Group disbursed 18,334 crores and 16,329 crores in vehicle financing during FY 2022 and 23 and FY 2021 and 2022 respectively. Approximately 17% and 27% of the commercial vehicle unit sales in India were made by the dealers through financing arrangements with the company's captive financing subsidiary during FY 2022 and 23 and FY 2021 and 2022 respectively. Let us have a look at the growth drivers. EV ecosystem. Tata has created synergy with Tata Chemicals, Tata Power and LXC to win the EV race in India. Tata Chemicals is building energy storage systems. Further, they are working on manufacturing lithium-ion cells. Tata Power is the leader in the charging infrastructure industry with more than 50% market share. They have signed MOUs with IOCL, HPCL, IGL and Government of Maharashtra for developing EV charging infrastructure. Early mover advantage in the EV segment in India. Tata Motors, being one of the front runners in the EV space in India, would definitely benefit from the growth of EVs. Its Tata Nexon EV has created a niche for itself and has changed the perception of Indians towards EVs. It had a market share of 65% of total sales in FY 2022. The EV segment of the company holds 71.4% of the total market share and has witnessed a volume growth of 218% as compared to last year. It has also set up 100+ charging points and has launched its EV in 50+ cities across the country. The company already has 4 vehicles in the market: Jaguar EV, Nano EV, Tiago EV and Nexon EV. In the bus segment, they deliver electric buses to the state and union government. They aim to reach an estimate of 4 lakhs electric buses in the long run. High market share in the commercial vehicle segment. It sells various medium and heavy commercial vehicles, including trucks, tractors, buses, tippers and multi-axled vehicles. It is also a market leader with 45.9% market share in the LCV segment. Though the sales of both these segments witnessed a slowdown due to reduced construction and mining activities owing to COVID lockdown. New strategy for Jaguar. It is planning to make Jaguar an all-electric brand by 2025, and within the next 5 years, Land Rover will become 6 pure electric variants. JLR aims to be debt-free by 2025. JLR aims to have full BEV powertrains accounting for around 60% of the total JLR sales by 2030 and 100% of volumes by 2030. New models that would struck a chord with Gen Z. Tata Motors has expanded the passenger car range and its new variants are rocking the Indian roads. This segment contributes more than 6.8% to the company's consolidated value and has firmly re-established itself in recent years. With the current range, Tata Motors addresses 63% of the automobile market in India. It is anticipated that with the launch of Hornbill, a subcompact SUV that will be positioned below the Nexon, the firm will be able to cover a wide spectrum of the market. Risks in the company. Huge debt. Tata Motors have huge debt that has been consistently increasing from the past few years. As of FY 2022, it has a debt of Rs 1,35,904.51 crore and which is expected to increase since they have a capex plan of Rs 3,000 to 3,500 crore in FY 23. Due to this, the profits of the company would decline. With its new reimagine and refocus strategy, it aims to be debt-free by 2025. High competition. The Indian automobile sector is highly competitive, due to which Tata Motors does not have significant pricing power in the passenger vehicle segment. In commercial vehicles, the pricing power is substantially lower with buyers. The commercial vehicle industry consists of buyers who are purchased in significant quantities and the government, and it generally dictates its terms to their suppliers. High commodity prices. The rising inflation commodity prices have increased, due to which the margins of the company would take a toll. The increase in the price of steel and aluminium, the margins too have taken a toll. Shortage of semiconductor chips. The shortage of semiconductor chips is a major problem for automobile manufacturers, and it has adversely impacted the JLR segment, which contributes a major chunk of revenue for the company. Due to the semiconductor supply constraints and the impact of COVID-19, the wholesale sales of JLR was 30,000 units lower than the anticipated value. Here is a table showing the key performance highlights. Operating results. In FY 2022 and 23, consolidated income from operations including finance revenues increased by 24.2% to 3,45,967 crores from 2,78,454 crores in FY 21-22. This increase was mainly attributable to increased vehicle volumes, mainly for Tata Commercial and Passenger Vehicles and Jaguar Land Rover. The net profit attributable to shareholders of the company was 2,414 crores in FY 2022-23 compared to a loss of 11,441 crores in FY 21-22. Tata Motors, on a standalone basis, recorded deferred tax asset of 1,615 crores in FY 2022-23 on carry-forward losses, which is unabsorbed depreciation, as it is probable. Profits will be available against which these will be utilized in coming years. The profit before tax was 3,058 crores in FY 2022-2023 as against the loss before tax of 7,003 crores in FY 2021 and 2022. Excluding the exceptional items, profit before tax was 1,467 crores in FY 2022-2023 as compared to loss before tax of 6,374 crores in FY 2021 and 2022. Increase in volumes, better management of costs, softening of commodity prices have resulted in profits for the year. Tata Motors SWOT analysis. Strengths. Tata Motors has a well-diversified portfolio of vehicles which includes right from economical passenger vehicles to luxury cars, and the penetration of Tata Motors into the commercial vehicle segment is also very impressive. It creates a brand loyalty for the company. Weaknesses. The revenue of Tata Motors is heavily dependent on the JLR segment, which can hit the business and profitability if a slowdown occurs in this segment. Such situations occurred for the company when there was a massive decline in demand for JLR in Chinese and European markets, and the rest was fueled by the pandemic in 2021. Opportunities. With the advent of electric vehicles in India and other nations, Tata Motors can take the advantage of its innovative legacy to increase its market share in the EV segment. Its sister companies like Tata Power can create the entire EV environment by installing more charging stations. With the economy coming on track and industries coming out of recession, the purchasing power of people is expected to increase, which Tata Motors can use to increase their revenues and market share in the PV segment. Threats. The government's increasing concern for the environment has posed various threats for the company, as various policies have been implemented in the past to reduce pollution, which has caused an overall slowdown in the industry. International issues like Brexit, Chinese economy slowdown, US import tariff, trade wars, and pandemic can severely affect the company in the future, as it has also done in recent years. With the advent of foreign PV companies like MG, Kia in India, the market share of existing companies will shrink severely, and Tata Motors will be the one among them. Future outlook. Being the industry leader, Tata Motors spearheaded the CV growth to gain a higher market share in each of the four segments: MHCV, ILCV, SVC, and buses. Continued investment by Jaguar Land Rover in new products, services, technologies, and manufacturing capabilities is key for the long-term success of the company. With an aim to redefine modern luxury and the growing worldwide customer appetite for electric vehicles, JLR is accelerating the reimagined strategy transformation into a business that will deliver double-digit EBIT margins within 5 years and achieve net zero carbon through the company's entire value chain, including its products, supply chain, and operations by 2039. The new Range Rover introduces plug-in hybrid electric propulsion with a segment-leading official electric-only range of over 100 kilometers. Over the next 4 years, Land Rover aspires to introduce 6 all-electric variants across 2 architectures: the Flexible Modular Longitudinal Architecture (MLA) and the Electric Modular Architecture (EMA). It expects a 60% of the global Land Rover sales to be purely electric by 2030. In conclusion, Tata Motors is taking concentrated actions to be future-ready and create a virtuous cycle of growth and returns for the shareholders. The automobile industry is growing at a rapid pace in India and has a lot of growth potential. With the transition of the automobile industry into the EV segment, Tata Motors can see a huge upside in the future. The Tata Group's ecosystem will help them capture a significant market share in the EV industry. The group is also actively exploring partnerships in battery cell manufacturing in India and Europe to secure the EV supply chain.